In high seas or calm, both opportunity and risk lurk just below the surface. Answers require in-depth analysis. Welcome to BlackFin Group's Shark Cage podcast, where experts dip below the surface of important industry issues in search of hidden opportunities.
Hello, and welcome to the Shark Cage. I'm your host, April Ball. Today, we have an industry veteran joining us. Our guest brings over 40 years of diversified experience in capital markets, mortgage servicing rights, GSEs, and Ginnie Mae relationship management and seller and servicer requirements. Please welcome Lu Slettedahl, principal at BlackFin Group, to the Shark Cage.
Hi, April. So good to join the Shark Cage today. I guess we have a number of things to talk about, don't we?
We do, because you recently wrote an article about GSEs, didn't you?
I did.
Can you share with our listeners why having a strategy behind GSEs is so important?
It's real simple. It gives you options as a lender. So if you have options, why not pursue them?
What are the benefits behind these options, and how can our listeners capitalize on them?
So let's talk a little bit about Fannie Mae and Freddie Mac first, okay? For just a historical perspective here, they are major business partners in the purchase and issuance of conventional conforming mortgage-backed securities. They're great business partners. A firm can insulate its market position by aligning itself with the GSEs, as their liquidity position has been proven in time to be sustainable. Wouldn't it be great to have a partner who's sustainable? Think about what that does to your long-term business strategy. This means that your firm, whether you're an independent mortgage banker, community bank, credit union, or housing and finance authority, can have the chance to protect your business model. That's what you do every day. You come in and you think about how to be in business. So we all know that managing investor changes in the market can be inconsistent and difficult to administer. Think about that. All the investor relationships, all the programs, all the pricing steps, a lot of things to take care of. And this year, it's been all the more difficult in 2022. We've had a historic time with rates rising, increased price volatility, and market uncertainty. These factors weigh into instrumental changes for your firm, your people, and your leadership team. It doesn't mean that your firm needs to completely change your business model. That's not what we're talking about here. It means your firm, when working with the GSEs, then has options to protect your firm from unexpected and at times radically quick changes that occur in the market. Those changes can be overwhelming and cost your firm money. Let's now talk about the benefits of GSEs and how can you capitalize on it. Let's start with what are the benefits of the GSEs, and let's take the mystery out of this question. There's too much mystery that goes on within the capital markets arena, and this is not a hard discussion. There are various requirements in the loan origination and sale process. We all know that. The GSEs have their rules too. Some of these investors that you work with are comparable to what you could do with the GSEs, and some are not, which means your firm has to manage many different investor relationships, including origination, loan program, guidelines that I mentioned earlier, underwriting requirements, loan delivery processes, purchase requirements, and timelines. That's a lot in one sentence. So what that means to your team is everyone has to learn, manage, update, and implement with accuracy. That creates another layer of management time, cost, and potential risk when you're dealing with multiple investors. Again, a GSE execution is an option to what you're doing now. GSEs have an assortment of loan programs within their wheelhouse. So if you can originate a loan to, say, investor A, B, or C that's identical to GSE requirements, doesn't that save you operating expense and improve your overall firm's rate of return? I would think the answer is yes. So let's give you some examples of the benefits of becoming a seller servicer. You, number one, and I'm not going to give you a long list today, but let's chat about what those are. Item number one, you gain the benefits of assorted loan programs that your group of investors may or may not offer. Number two, credit overlays, such as FICO score adjustments, LTV adjusters that reside within the investor base, and they're based upon that firm's risk appetite, may be different than the GSEs. All of your investors have different ways they price. Think about that. Three, the ability to sell whole loans or issue a mortgage-backed security. Now let's talk a little bit about a mortgage-backed security. What is it? It's a mortgage-backed security. It's an assembly of a pool of mortgages that comes into a security form. Plain and simple. It's very liquid, and unlike holding loans in your portfolio. So if you could issue a mortgage-backed security, even hold it in your portfolio, you could still sell it in the market quickly if your firm needs to do so to generate capital. A great financial tool. Number five, you now have the ability to run best execution models comparing whole loan versus mortgage-backed security pricing, another income opportunity for your firm. You might already do that within selling to your other investor pool. Why not broaden it out and add the best capital markets teams that you can see in the industry? Fannie Mae and Freddie Mac. Number six, the GSEs have what are called pay-ups for different loan balances. Some investors pass those pay-ups to you. Some may not. They may or may not be what the GSEs are willing to pay you. Something to think about. These pay-ups can be different than what you are seeing, and they generate income. Again, income to your bottom line. These are the opportunities. Oh, and let's not forget, you have the flexibility to retain or sell your loan servicing rights. So if you're a company who's always sold your servicing, you can still do that when working with the GSEs. It might look a little different than what you're doing now, but it's still a viable option. And if you're a company that wants to keep your customer base close, you can do that. You can retain your servicing, still have immediate contact with your customers all day long. So again, you have flexibility. That sums it up. Those are the 7 key points that I wanted to share with you today to grab your attention as to why doing business with the GSEs is important.
Wow, Lu, that was so much great information. I've already learned so much, and I know that our listeners have too. And what can they do with all of this information? Can they call you to schedule a meeting? Can they learn more? What are the next steps for our listeners?
Yes, do something. Have a conversation. And don't put this topic on the back burner. You could be closer to being ready to do business with the GSEs, but because you haven't focused on it, you don't know what's in the magic box, right? The prize could be right there in front of you. You just don't know it. And if you don't know, call. I do operational assessments of firms for GSE preparedness. And we could have a conversation about where you are at your firm, what you want to do, and how long it may take to get there. So I welcome your phone call. I've always said in my career, questions are free. So please reach out to me, Lu Slettedahl at BlackFin Group. My direct phone number, and it is direct, is 720-318-8675. So let's have a conversation. I look forward to hearing from you soon. Thanks, and have a great day.
We've been visiting with Lu Slettedahl, principal at BlackFin Group. Lu, thank you so much for your time.
You're welcome. I appreciated the time also.
Join us next time as we continue to introduce a community of mortgage banking experts committed to your success. Thank you, and we'll see you all again soon.
Thank you for joining us in the Shark Cage. To be a guest on a future episode, send an email to info@blackfin-group.com. To find out more about the show or the information provided in this episode, visit BlackFin Group online at www.blackfin-group.com.